Hey, welcome back to Everything Money. We're glad you joined us. As always, this radio voice is brought to you by Seth the Wise. Paul is here. Mo is here doing our trades.
Hello.
Today we're talking about plug power, Paul.
More like butt plug power.
The modern hydrogen fuel cell.
I didn't know you were going to say it.
Technology. Plug power. It's the best thing ever. We're revamping the show, Paul. This is the best thing ever. We're going to show you why. How they make their market cap is like $1 billion. They make no money, and it's just the best thing ever. You should just YOLO. Paul, tell us how we should YOLO everything in the plug power.
I'm all about YOLOing. Guys, really quick, follow Mo and I on Instagram because I'm very vain and need that blue check mark sooner rather than later. So guys, here's the 10-year chart on plug power.
Beautiful.
Do you see this?
I just love constant growth, and just look at the chart.
$1.16 and 12, got up to $10, went back down to 1. And then this is where everybody got excited.
We missed the boat, Paul.
We missed it. And people were telling us we missed it. $73 a share in January, and now it's at $25 a share.
Oh, boy.
So, guys, one of the biggest things I talk about when it comes to investing is if you don't understand something, avoid it. Some people will tell me you don't do enough due diligence. Exactly. So I'm going to draw an extreme analogy. People tell me that's not the right analogy. If you wanted to date somebody and you met Tiger Woods, and you see all this cheating and all this cheating, you're very adamant against cheating. Like I'm adamant against buying companies that I don't understand and don't make revenue and then don't have profit and all that stuff. Why would I even entertain Tiger Woods? His history says he is going to cheat on me. Mm-hmm. Could it be different this time? Could we find out that he got castrated, he can't cheat on me? It's possible. But why waste my time? But I'm sitting there like, this is the way I look at the world. I look at it going, why would I ever waste my time with this person? If every single time I want to do business with somebody, if Bernie Madoff said to me, Paul, let's go start an investment fund. But Bernie, you had the biggest Ponzi scheme in history. Rest in peace, by the way. Bernie. He had the biggest Ponzi scheme. Why would I ever entertain could he have changed in prison? Sure, he could have changed, but why? Why even deal with that? Then I look at Plug Power. This is the quarterly data on Plug Power. What the F does this even mean? It lost $300 million. It had negative operating revenue. Somebody out there is going to say, well, Paul, what it is it? I don't care. I don't care. I don't want to invest in a company where my revenue can go negative. This doesn't even make sense to me. This is absolutely absurd. Look at the profit numbers here. Ready for the profit numbers? This is by quarter. Loss, 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 loss. Let's go to the shares outstanding.
Oh, boy.
218, 220, 231, 236, 260, 305, 317, 371, 426, 513. All they're doing is diluting you and losing money like crazy. Because guess what? They have to dilute you in order to pay for those losses.
Surprise, surprise, Paul. Meet Kevin said 7 months ago that Plug Power is a rocket going to the moon. I'm shocked to hear this.
It is going to the moon if the moon suddenly lost its orbit and crashed right into Earth.
It was making a rocket formation, just going up, and then maybe that's what he meant.
The rocket is the boosters that are coming back from the.
Yeah.
Paul, here's another video that says this is going to be a 1,000x stock. I guess if they completely bottom out, they have a lot of room to grow. But
so
show us some more numbers.
I mean, they have a lot of assets versus liabilities. Current assets of 5.1 billion, total liabilities of 867. So that's pretty good. Cash flow numbers. Let's look at these cash flow numbers. Sick. You ready? By year. Negative 30, negative 22, negative 30, negative 47, negative 57, negative 100, negative 100, negative 87. If you came to me and said to me, Paul, I want you to buy this business from me, I would literally try to murder you in front of me.
Paul, that's the point. Is I think young and new investors need to look at this and say, if someone came to you and said, I want you to buy this company,
for $12 billion, would you buy this stream of cash flows?
Is that what the market cap is? $12 billion?
Now, granted, take off their net cash. By the way, I love how Nicole literally was shocked by what I said, and I think I've said way worse on the channel. I just saw Nicole; she was just like, I just look at it going this is absolutely dumb.
Yeah, but I don't think our viewers know that, Paul. So bring it back home is folks, you are buying a company. Just because you spend a little bit of money on a stock ticker, you are buying a company. A dollar bill in your pocket versus in this stock are two very different things. And obviously the risk factor, the downside risk in terms of this could get much, much worse, Paul. So that idea of I'm buying a company This is astonishing. $12 billion?
So what's the saying about baseball? 300, 350, 300 gets you in the Hall of Fame, right?
300 gets you in the Hall of Fame.
The same is with investing, guys. In investing, your job is to get 30 to 40% of your investment ideas correct. If you do that, you're going to be fabulously wealthy. You're going to beat the market. Now, the other 50 or 60, you can be wrong on, but if you have the right process, you won't be wrong on by much. And that's the key to success in investing. When you're wrong, you're not wrong by a ton. You're not losing a ton of money. If you buy 100 of these companies, you will end up losing a lot of money. Even the 2 or 3 that work out will not make up for the losses that you had on the other 97 or 98 that did not work out. That's the point of what we're trying to teach.
Yeah, look at this. I showed you this before we started, but these are what all the meme stocks do. Plug goes like this, up, down. Go to the next one. NIO. Oops, NIO. Here we go. Same situation. Nothing, all the way up, down.
You didn't have to change the chart, by the way.
Let me keep going. Nikola.
Oh, God.
Nothing, up, down. Let me do another one.
So what we're trying to teach,
Chef,
folks,
we just did this
yeah,
one.
Tattoo Chef, is we just need you to avoid that enormous mountain of investing right there.
Nothing, up, and it's coming right back down. Last one. Workhorse.
Workhorse.
Oh, my God. Don't even bring this up.
Best thing in the world, all the way up, all the way down, back to exactly where it started. This is what you get with this crap.
You almost said not.
I almost said it.
Paul, how do we avoid the chaos on YouTube telling us to buy this when it's high?
It's very difficult to avoid it because we do have that bias of when we see people that look at us. I was apprehensive about Alibaba. I loved all the numbers about Alibaba, but I was apprehensive. Why? Because of China. But then I heard that Charlie Munger had his guy verify it, and Charlie Munger bought stocks, and that made me feel comfortable. So I do understand that we like seeing our friends, but who are your friends? If your friend is the neighbor next door's kid who just, lost his virginity at prom, you have to think about that. Like, this is my investment advisor? Is the neighborhood pimply kid? And if your neighbor was me, then you weren't losing your virginity till you're 37 anyhow. So don't even listen to me because I can't even. The whole point is, guys, you're trying to understand and find a process that works for you. That's it. You're trying to find a process that works for you. What's that process? The one's been proven over time. If it's charts, but there's a process to it. If it's value investing, unfortunately, you have to go against the grain. And going against the grain doesn't mean, honestly, just go to YouTube. If every YouTube celeb out there is saying buy this stock, that to me tells me I got to avoid that. I always joke with my friends. We have a group chat. If they ever talk about a stock, I immediately go, yeah, that's probably a crappy stock. Right?
It was funny. Yesterday, Connor put in there the fund that he works for. He goes, our analysts hate Baba. And I was like, great, that makes me even more happy I'm in Baba.
Yeah, absolutely. So their analysts hate Baba. Charlie Munger loves it. Manesh Prabrai loves it. Okay. Who would I rather? Retail guys or guys who have made, I just don't look at it. Again, I don't believe in buying a company just because people you like even on the value side. But my only reservation of Alibaba was China. And people that I respected are okay with that risk. I'm okay with it too. Now, I still came up with my own valuation for it, did my own analysis. I said, listen, I think this will still be a $500 or $600, even a $700 stock potentially down the road. I'm willing to wait it out. That's just the way I look at it.
Yeah, we realize that the waiting game is not very exciting. So most people get into investing, Robinhood and Webull, they give you updates like buy this, but it's like a video game to them. And we're trying to teach, if you're new to this, we're just trying to teach a different avenue of, it's actually, a lot of this is just avoiding all of this. Just avoiding as much as we can until we find 5 or 6 to maybe a total of 20 really great companies that we can buy undervalued. And this at this point, the valuations are so all over the place, right, Paul? This is just a stay away for.
I don't understand the revenue. I don't understand how they're. I do understand how they're going to cover their losses. It's going to be issuing shares and diluting you. I don't understand any of that stuff. I don't care about looking further. Paul, you're missing out. Good.
We missed out on a lot of stuff.
I will miss out on everything in the world. I don't care because the ones that I do understand, I go, look at Alibaba. As long as you believe Alibaba's numbers, which I do now, I look at it going, okay, if it goes down to 100, I'm going to buy more shares at 100 as long as the thesis doesn't change. Because 7 years from now, when it's generating 3 or 4 times more revenue and I bought it already discounted, it'll eventually work itself out. Okay, great. I'm fine.
That's our take. If you're in this, Paul, actually, I was going to close, but I don't think about it. We get this question a lot. Is new people who find our Patreon, they finally subscribe to us, they join our community, and they say, dear God, I still own this. What should they do? I bought when YouTube told me, and now I'm down 80%.
You have to do what's right for you. It feels right. Some people want to make their money even. Guys, a bad investment's a bad investment. If it's not worth the money you're paying, if you have it right now, you got to move on sometimes. Sometimes the best idea is to move on from a bad investment and say, okay, I'm moving on, finding a better deal. It's hard to take that loss. I get that. It makes you feel better. Your other gains will be written off against those losses. You'll have a write-off against future gains. I just look at it saying, if this makes sense to you, spend some time learning. Start reading. The emotional aspect is way more important than numbers. It's all about understanding if a stock goes down that I really believe in, as long as the fundamentals didn't change, I should be buying more of it. In these companies, the fundamentals aren't changing, but it doesn't mean it means they're not getting better. So when the stock goes down, what are you doing? At some point, you just got to sit there and say, I'm moving on because the company doesn't make sense. I can't look at Plug Power and say, oh, these financials are pretty dope. I just look at it saying, these are terrible financials. What am I supposed to do?
Yeah, if you find yourself in the position where you don't know why you got into this stock and you don't know how or when you'll ever get out, that's a great time to start watching more of our videos and learning. We're trying to teach a process and maybe give you some insight as to how to get in and out and why you maybe should. Oh, look at those 8 pillars. Oh,
this is our 8-pillar software, guys. Now, I bought companies that had one check before. CCL, I think, had one check, and I'm still a believer in CCL. Oh, that's the other company. CCL I have.
Yeah.
Guys, the difference is this didn't have some 1 year, oh, COVID shut down my ships, etc. This just sucks. This just all around sucks. Negative return on assets, negative return on equity, negative return on invested capital, negative 5-year return on invested capital. Oh, book value grew. Why? Because they issued a bunch of shares. Free cash flow, average of loss. The average of the last 5 years is $108 million loss. Price to sales were up. This is literally every metric here is the worst possible metric you could pick.
Wow. But it's going to the moon, Paul.
It might go to the moon. And I'm not saying it definitely won't. What I'm saying is if you have 100 of these, you are going to lose a lot of money overall.
If this speaks to you, join our Patreon, watch our videos, and it might shed some light on your investing moving forward. We appreciate we're giving away a Tesla, Paul, by the way, to one of those patrons come November. Our second Tesla giveaway. Join the Patreon, you're automatically entered. We're going to give them a Tesla, or we're going to give them Plug Power stock.
Plug
Power stock, yeah, that'd be great.
Whichever one do they want.
Fondle thumbs up, and we'll see you next video.